Hi, this is Dave with Market Trading Concepts. It's Saturday, April the 21st, closing out options expiration week of Friday the 20th of April. So let's start out looking at the indexes, and basically what we're looking at with the indexes, we were looking at last week, and now looking at the market. You had, several days back, you had a test of this low here, which was the target that we were talking about for the initial short-term move in the market, the initial sell-off when we had several closes below the 21 EMA here. So basically what we thought would happen came to fruition, and then we got to a point where we said, okay, now we've pulled back to the 21 EMA, and I'm just going to zoom into the chart here. We pulled back to the 21 EMA. Let me just clear this off as well. Okay, let me zoom in. Okay, so now what we're looking at here is this situation where you had a test of the 21 EMA here, and we said, okay, here, this area here is decision point. So this area here is kind of inactionable. And we were looking for either a push above this level here, above this bar on this day. Okay, so we were looking for a push above this bar on this day. And I apologize, the chart's pretty messy. Or we were looking for a push below this bar that happened on this day. So here was the kind of dead zone and the no decision point zone. And what we were looking for was to see, are we going to follow through to the downside on a swing trading basis, or are we going to follow through to the upside on a swing trading basis? So basically what we had happen was we had this sell-off, this initial probe. This is really looking like a higher low. Okay, this is looking like a higher low put in place, and then we had a break above the 21 exponential moving average, a break above this bar here. Okay, so basically let me zoom in a little bit more just so that we can get a bit more detail here and look at some levels. So now what we have is this situation where, okay, it looks like we're long side here when we decisively broke above this 21 EMA. And we decisively broke above this candle back into, this decision zone outside of this area. So it still looks pretty decent to the long side, but if you notice what's happening is here, you had this wide range bar, okay, you can see this range, and then you had a pretty tight, I guess what you would call an inside day, and then you had a break below that the next day on Thursday, but it's still inside the range of this bar. Okay, still inside the range of this bar. Now you've had 1, 2, 3 days inside the range of this bar, and you even have this one inside the range of that bar. So when you see a situation like that happening, I'm looking at it from this perspective. I'm looking at, here's the major support. That was a very sloppy arrow. Here's the major support here. Okay, you can see you tested it here, and you know going back you have this line here. So this is coming in at 12,652, and then what you have is you have your major resistance is above up here around 13,000. Where are you? 13,242 on the high side. But now what you have happening is this wedge pattern where the price is just getting tighter and tighter and tighter inside of this area. Okay, so I think it's fair to say that I have more of a long side bias than a short side bias, but you can draw a trend line from these highs, you can draw a trend line from these lows, your resistance, your support, and you've got this kind of mini triangle or mini wedge forming here. Okay, so the question is it going to break out to the upside, or is it going to break back down to the downside outside of that wedge? Now, if it breaks back down to the downside, that's fine. What I'm expecting to have happen is one of these, where, you know, we're going to start coming back up and it's going to break out to the upside. That's what I'm looking for. Our trend is still intact on the daily chart, and this is all the daily chart we're talking about, if I didn't specify that already. So now this is what I'm looking for, but is this going to happen? We don't really know. But even if it does break out to the downside, I still want to see if it's going to fail, you know, these support levels, 12,800 and then 12,652, because I really wouldn't want to, I'm not really interested in the short side until we actually follow through with a breakdown of this level, and then I'd look for a retracement back up, you know, into this kind of falling resistance. That's what I generally be looking for to get short, with the expectation that it's going to roll lower. Now, because we held these major supports, I'm not that interested in the downside unless that scenario plays out. What I'm really looking for is a continuation higher to see if we can, you know, we've closed here above the 21 EMA. We closed here above the 21 EMA. Here was a close below it, but it was, you know, a sloppy day. So when you see the price doing something like this, what you're looking for is an explosive move, you know, outside of this kind of wedge pattern. And that's really what I'm expecting to happen going into next week at some point. I don't think we can stay that tight on the price action that long. It's going to have to give one way or the other. So that's basically what I'm looking for. Now, in terms of actually trading that, I think what I would look for is if we had what I would expect to happen is a momentum day outside of that range, and then be looking for, you know, some long side trades outside of this range, outside of this level, these highs, on an intraday basis. I wouldn't want to just jump in and swing trade that. So I'd probably be looking for, you know, intraday day trading possibilities, you know, using 5 to 60-minute charts for looking for minor pullbacks, or looking for breakout continuation type trades. So I hope that makes sense. From a swing trading basis, though, what I'd be looking at is I'd like to see these start moving higher, right, and resume their kind of uptrend, and then look for a decent pullback, and look for, you know, we really need to get above these levels to be really actionable. We really need to get above, you know, these levels here, and put in a new swing high. So what I'd be looking at here is if we had this situation, maybe a potential pullback, a minor pullback, and look to see if we can break these highs, or I'd be looking at a situation where you can look to get long above these highs once we clear this resistance, with the expectation that we're going to put in a new higher high. So I hope that makes sense in terms of decision points. I mean, you don't want to really buy this high hoping it's going to break through, but you'd want to see some strength above there to get long, or you'd want to see, you know, these roll back up and look for a pullback to get long. So I think it's really going to depend on how the market unfolds and what opportunities look best. But what I'm really looking at is a breakout of this, you know, this congestion area, this mini wedge pattern. Okay, I'd like to see a break of that. Now, just taking a look at the Dow futures from a different perspective. If you look at this from like a Fibonacci type perspective, where you have your high up here and your intermediate low down here, you know, your high being 13,246, your low being about 12,682. I'm sorry, 12,682. So what you're looking at is a retracement from this high to low back into this area. You're really just testing your 61.8% retracement around 13,020. So if you look at this from a Fibonacci perspective, this would be an area where some people would look to, you know, if they were expecting it to go lower, this would be kind of their decision zone between 12,949 and 1320, these two levels here, to get short and expect it to roll over. And on the flip side of that, this would be an area where if, let's say, you've probed above this level, But if you start getting some decisive action above 13,020, well, then what you would be looking at is a failure of this zone, and you'd be looking for a continuation higher. So those are some pretty decent levels that you could look at as well if you want to, you know, kind of tighten up your analysis. You could look at, if it looks like you're going to sell off and you're going to continue lower between 12,949, maybe using a 60-minute chart or a 30-minute chart or lower. You know, you're just kind of looking for confirmation of that. And if it looks like it's breaking that level and it looks like it's going to go lower, you know, you could sell a retracement on one of those charts. The other thing you could do is look for strength above this level and look for the opposite. You know, look to buy a pullback on one of these lower time frame charts. You know, that way you can kind of limit your risk, and you can say, okay, you know, here's kind of my range, here's my box. If it breaks above, I'm long. If it breaks below, I'm short. But then I want to look at, you know, an entry based on, you know, drilling down to one of these lower time frames. So that's another kind of technique that you can use, and some levels that you can look at if you're interested in swing trading out of this zone. If you look at this, this is really, you know, this is, in my opinion, is a no decision zone at this point in time. You really need to see some strength one way or the other out of that zone, or, you know, out of that, you know, that minor kind of wedge that's forming there. So that's a really bad drawing, but, you know, but if you see a decisive break one way or the other, you can use those levels to kind of tighten up your your entry and analysis, and then drill down to lower time frame charts. So I hope that makes sense. So now let's take a look at the weekly chart of the Dow, and really what you just had here, if you look at the weekly chart, as we mentioned in one of the previous videos the other week, all this was really a pullback to support on the weekly chart. So from the weekly chart perspective, this is, to me, this is pretty normal. I mean, if you look at the weekly chart, all we did was we pulled back to some of these key levels, ended up being, you know, 12,663. We didn't even touch the 21 exponential moving average around this level of 12,611. So on the weekly chart, I mean, everything still looks pretty good to the long side, except for the fact, let me just expand this chart, except for the fact that you have, now you're starting to see, you know, you're starting to see your MACD potentially roll over here. So, I mean, but that's not, that in and of itself is not, you know, the end all of this trend. I think what you would really need to see is you'd want to see a retest of these highs, a breakthrough of these highs to continue long. You know, this 13,240 level is very key resistance, I think, at this point in time. But this is a little bit of a warning sign. But I think net I still have at this point in time, net I still have a long side bias, you know, taking a top-down approach from the weekly chart. I really don't have a choice but to have that long side bias, because if you look at this, everything still favors the long side. Okay, everything still favors the long side. So this is a bit of a red flag. The daily chart is a little sloppier, but I'm looking for a continuation to the long side. The good news is you don't really have to make a decision until it really confirms, because even though you have a bias, you could still wait until that bias kind of you know, proves itself out. You don't have to say, well, look, I think we're going long, so I'm just going to go long. Well, you can wait for some confirmation of that, and by getting that confirmation, what it gives you is some levels to work with, and it gives you some techniques to work with. So I think that's really where I'd be looking for a breakout of that level. Or, you know, now you have this Darvas box forming where the top of the box is at these highs. So even a breakout of those highs, looking for continuation higher, because even if you get through 13,020, you still have these intermediate price highs to contend with. So I think that would be the safe trade, looking for, you know, a break out of that wedge pattern, but ultimately a break of those highs, and then looking for like a pullback after that, after you get through that intermediate resistance, and then looking for, long side continuation. So that's another way that you could approach that if you want to be a little bit more conservative and you want to look for the safer trade. So I hope that makes sense. So now let's have a look at the S&P futures. So the ES looks, the ES looks a little bit, I guess, weaker than the Dow, just because it is kind of doji here on the day, and it is below its 21 EMA. So I think you'd still really want to look for direction outside of outside of the highs, really, to continue on the long side. You have a more prominent Darvis box forming here, and I think what you'd want to see is a break of that Darvis box. I think you'd want to see these Hakinashis rotate back to blue, like this situation here, rotate back to blue somewhere over here with a break. If we go into a squeeze and then we get a fresh Darvis squeeze forming, that would be even better, because you'll get some potential momentum out of there. But it's a little bit, if you look at the weekly chart, I think the highs probed above last week's highs, but you're still, you're doji on the last 2 weeks if you really think about it, or if you really consider that. So there's not really that much more. There's not really that much more indication on where it wants to go at this point in time, looking at the ES. Now, if we take a look at the Nasdaq is weaker, and we actually have a short signal here. You can see on a radar screen we fired 5 bars ago on the daily chart, a recent Darvis short breakout. So if you look at that, if we start from a top-down approach on the weekly chart, we're just right. We're kind of doji on the week, right? But we're just at the 8 EMA. Okay, we're at the 8 EMA on the weekly chart, and we potentially have room to come down to this 21 EMA, which sits around 2,555 level. So, the Nasdaq definitely looks weaker. If you look at the daily chart, let's actually just expand out the daily chart here and see what this is giving us. Now, I apologize for this is a little bit sloppy, but what you can see is you've got some support coming in at these swing highs down here, okay, and at the top of this Darvis box, and where you had this, this breakout bar here, this kickoff bar, if you want to call it that, right? So now what you're getting is this pullback here, but you're still, you've got this short squeeze going with the break of the Darvis box. You've got this potential Darvis squeeze coming into play here. Although you're 1, 2, 3, 4, 5 bars into it, 5 days into it, but you can see volumes kind of picking up here. Volumes kind of picking up here. So it's interesting. Like, is this gonna flush down and flush out, down to this support level or lower? This is kind of a red flag, and is kind of counter to my analysis on the other indexes. So this is something you have to watch and say, okay, who's the leader, who's the follower? Is this going to follow through, or is it going to hold support and push higher? So keep an eye on this and wait for confirmation. I think we're kind of in a tricky spot here in the stock indexes, and I think we really need to see some more decisive action and some more confirmation to see which way these indexes really want to play out. So right now, best thing to do is wait for the next setup, wait for the next signal, and see if all the indexes kind of come back into alignment and they're all traveling and they're all hanging out together. So if we look at the Dow transports here, transportation index from a Dow theory kind of perspective, you have an initial break of this kind of this trend line, which is, it's not a clean trend line, But you have a break of that, and now you're kind of going sideways. But you also you're also in a weekly squeeze here, and you closed probably 50% off the highs here. So this is a little bit of a red flag as well. This weekly bar here is a bit of a red flag for the long side. What you'd really like to see is you'd like to see a little bit more decisive action in a break of these levels. You'd like to see maybe the transports leading, but they're just going into a quiet period, and it'll be interesting to see. You've got this situation on the daily chart, and you've got this situation on the weekly chart where in your potential breakout position, you fired an initial short back in here, from here, and you didn't really follow through, and you came all the way back up to these highs. So at this point in time, you have this potential action going on, and I think if you get a Darvish squeeze follow through to the high side or the low side, that will be really telling. So here's another kind of piece of the puzzle to watch. This is kind of a wide box. And it's a no action zone. But if you get a break of one level or the other, I think that will be very, very telling. So I'm just going to take a quick look at the bonds. I really have nothing on the bonds except to say that I really thought that the bonds were ready to roll over, and I don't think interest rates can really stay this low forever. But a signal is a signal, and a chart is a chart. We didn't follow through with this signal back in here, where we thought that, first we had a short signal and it played out, and then it came back, and then I thought we were going to get continuation to the low side here, back in here, and then when we got a break above this level, we said, okay, the move's over, no reason to stay, short the bonds, and you can see the bonds have just kind of kicked off, powered off, and they're just going higher and higher, and they're just going really tight now. They're in this really tight consolidation range up here, and they're approaching their weekly highs again, although they closed, the 5-year closed doji on the week there on the weekly chart. So I really don't have much on them except to say that you've got this huge dead zone now, where you're back in a weekly squeeze, and it's really hard to say, like, if you break out to the high side here, the only thing you can say is interest rates are going even lower. But I don't know how long the market can really sustain this. I personally think there's some big forces at work that are kind of making this happen. And by big forces, I mean probably governmental and banking forces. So I wouldn't fight this, but I really don't. I don't like it to the short side anymore. It doesn't really make sense, and yet it doesn't make sense to the long side either. So I would probably just leave it alone and wait for for further confirmation. So the tenure looks much the same. Really no comment on that. And let's just take a quick look at the 30-year. The 30-year kind of looks the same as well. Yeah, the 30-year looks much the same. So I don't really have much comment on that either. You're right back in and around this congestion area and these highs. Same thing. No comment. Okay, let's take a look at a couple of the leaders that we tend to look at here and there. Taking a look at Google. Google looks like it kind of put in a kind of a sloppy double top. But if you notice this is a little bit telling, where you've got this higher high, and this is actually technically it's a lower high. So this is interesting. Now you've got this weekly short squeeze fire off, and this rotation back to red. And if you look at the daily chart, you actually had a Darvish squeeze short at 624.54 with a target of 590, just under 590.40. What is that? 590.48. So right now I think you closed at 596.06. So I don't think it would be a stretch of the imagination to expect a move down to hit this target about $6 lower. There's not a lot of room to there's really not a lot of room to get into this trade, except to say that it'll be interesting once it hits 590 to see if we're going to find support there or if we're going to cruise lower. And then you've got this level here around 560, which is the bottom of this weekly Darvis box. So you've got a couple of levels to see, okay, are we gonna hold 590? Are we gonna go down? I mean, we're at 596. Are we gonna hit 590 and then hold it, or are we gonna potentially go down to 560? So that will be interesting. You could kind of use these as market proxies to see if these these kind of high flyers are going to lead the market back down to the low side, or if they're going to find support and maybe push the market higher. So, you can look at the stock indexes and see if they're all working in tandem, as we mentioned earlier. But you can also look at some key stocks too and see, what are the key stocks doing? Are they following the market? Because, you can see certain things like, for example, let's have a quick look at Apple here. You can see things like Apple kind of led the charge higher, and the question is Apple, going to lead the charge lower as well? So those are some things that you can really look at. You can see, like, for example, Apple closed the week out at 572. So, it kind of blew off from the 600 level, which was a kind of a key psychological level, and it went as high as probably 620, 640. Not even sure how high it went. Let's just have a look. Just under 650. Just under 650, which was pretty crazy there. Now it's down to 572. It's at the 8 exponential moving average on the weekly chart. So the question now is, okay, are we going to hold that level? Are we going to hold this Darvis box here? Or are we going to, kind of come down to the next major support level, which would be around probably 540. Then you're looking at 520, 514. So there's a range of 514. If it doesn't hold these levels, then you'd be looking at those levels of 514 to probably 540. So first you'd say, okay, well, you've got 540, 520, 514. So depending on what side of the market you're on. Now, one of the things that I would really be looking for is this right here on Apple. You see where the 8 and the 21 are coming together. If they cross over here and then you get a break of this level, I'd be looking probably for a pullback, a pullback into the 21 period moving average, and then see if we're going to roll lower. So that's kind of what I would be looking at in Apple, because you've got a lot of distance between 572 and 514, that if it does kind of follow through to the downside, there's a lot of actionable area in here. This area here is really actionable below this support level, okay, and above this support level. So if you break this support, you could potentially get a move all the way down to there, and it would just be a normal pullback. If you really think about it from a weekly perspective, it would be nothing but a normal pullback. I mean, there's nothing unusual about that at all. And then I'd ultimately be looking for support around 514. I definitely would be looking for at least a minor bounce there at 514, 515. So, we're kind of at a crossroads here where it's like, okay, is the market, looking at the indexes, I think the market looks like it wants to go higher, but the Nasdaq is definitely weaker, and these stocks trading on the Nasdaq, Apple and Google, definitely look weaker. So are the other stock indexes going to, pull the Nasdaq up, or is the Nasdaq going to pull them down? So you kind of want to see that correlation, and you want them, typically the strongest moves are going to be when all the indexes are moving in tandem and moving together. So you really want to see how that kind of resolves itself. So, the more I look at this, the more I think, okay, I have a kind of bias on the Dow higher, but I recognize that the Nasdaq potentially looks lower. The ES is not as telling, the S&P. So I would kind of wait for that confirmation and say, okay, you know what? I have a bias, but I really want to see which way it's going to go, and then I don't want to fight that. So, worst case scenario, if you have a bias, just leave it alone. if it doesn't do what you expect it to do and you just can't get on board. Or just, kind of clear your mind and just say, okay, if it, here are my decision points. If it breaks this, that's where I'm going. If it breaks that, that's where I'm going. And you can look at it from that perspective. So I definitely recognize that the Nasdaq is a lot weaker than the other indexes. So I'm just going to be cautious and keep my eye on it and see, which one's going to lead, or if they're all going to come into, if they're all going to come into confluence, if they're all going to work, come back into alignment and move in tandem. So I hope that makes sense. Let's take a look at a couple of, let's look at the key currencies. And by the key currencies, I mean like everything seems to be moving opposite the dollar these days, the US dollar, and has been for a while. So let's take a look at the dollar and the euro. I don't really want to get too much into the other currencies. So if I could, let me just draw a trend line here, a minor trend line on the dollar index on the weekly chart. Now if you look at that, you can see this kind of minor trend line coming into play here, and then you can see this kind of minor trend line coming into play underneath here. Let me just project that out, new parallel. And it's not, that's not a clean trend line, but it's kind of, you've got this kind of wedge, this minor wedge pattern happening here too, on the weekly chart. And then if you look at the daily chart, you've got a kind of a wedge pattern happening too, where the price is just getting a little bit tighter, I mean, that's not a clean trend line. That's I mean, technical analysis is not a perfect art. It's kind of a quasi, I guess you could call it a quasi science. It's not perfect. So I mean, sometimes you have to look at not perfect trend lines and things of that nature. But I mean, what my eye is telling me here is you've got this higher high, this kind of higher low congestion area, or lower high congestion area, sorry, and then you've got this kind of trend line coming into play. So what I'm really looking at here is we're coming into a squeeze now, and the way that I really look at this is the price is kind of tightening up. It's kind of tightening up here, and at some point it's going to probably explode out of one of these ranges. You've got this potential momentum situation coming into play, where you go from a period of right now low volatility, right? So you're low volatility here, you're low volatility here, and at some point you're going to explode into a period of higher volatility, okay? Higher volatility. So when I look at that, I'm looking for some kind of movement, but I don't really have a directional bias at this point in time. I mean, the dollar index is kind of losing momentum here. I don't really have a clear indication because I've got mixed signals across the board here. So I'd like to see if it's going to explode out of this kind of wedge pattern on the daily and the weekly chart. But I'd also like to see if we're going to get some kind of, I mean, this is a really big range, so I'd really like to see a Darvis squeeze take place to give me a better indication of where which way it's going to go. So even if it explodes out of here, it could be a fake out. So I'm cognizant of that. So let's take a look at the euro to see if we can get any better indication. The only thing that I really want to point out at this point in time is just beware of big moves around the corner, because that's what it looks like we're setting up for. Big moves around the corner in the dollar, and if we get a big move around the corner in the dollar, it also looks that way in the indexes, that we're going to get a big move, or that we have a big move coming up. So you really want to pay attention to the fact that you could just enter into a really high period of volatility, and just be prepared for that, because the market isn't going to stay quiet forever here. Okay, so let's have a look at the euro. The euro is really interesting here. We've been talking about this 130 level for a while, and you can see here on the weekly chart. It probed below this level enough to actually trigger a Darvis squeeze short signal. But as you can see, it probed that level, and it didn't actually follow through at this point in time. So the initial signal, you have to be really careful that you don't just go with it, because, you know, the $1.30, you close the week at $1.32. That's 220. Let's see, that's 200, almost 220 ticks, or, you know, pips if you're in the forex market. But we're looking at the currency futures here, and that's 220 ticks below, or above rather, that 130 level. That is some major heat. So, you know, you don't want to just go with one of these moves, even though you had an initial signal fire. Now, if you look at it, what you can see is on the daily chart here, let's jump over to the daily chart, you had this initial probe of this level, right? And then what happened was, you can see this kind of accumulation where it closes more than 50% off of the lows, where it just got bought back up, and now it's breaking the top of this Darvis box. So sometimes these moves can be sucker plays where you just get people sucked in, or it's telling you initially where it wants to go, and then it's going to roll over again. So the safe thing to do would be to go with this on the second break. If this comes up and it retraces, and then it fails and it comes back down and it breaks through 130 decisively again, I'd say, yeah, you know what, go for it. Go for it on the short side, all the way down potentially to 126.44. But at this point in time, it was a probe, it was a test, it got bought up. So this is obviously very strong support here at $1.30 in the euro. But as you can see, now we're above the 21 exponential moving average. You've got this kind of trend line coming into play here, this sloppy trend line, and you've got, you know, these support areas here, support at 130. So I think what's happening here is you've got some a quiet period coming in here, the squeeze forming on the weekly chart, but not on the daily chart. But you have a little bit of movement on the daily chart. So at this point in time, you'd really want to see, you know, some kind of decisive move as well. You're really just sideways here in this massive range, you know, but you're kind of tightening up. So at this point in time, I would wait for further confirmation. If, you know, you get a follow through of this break of the $1.30 level, I would probably say, you know, that would be interesting to go with. But at this point in time, it just doesn't want to give up the ghost yet. You know, it hasn't given up the ghost. It's holding this level, you know, and that is obviously a key level. So, you know, wait for further confirmation. Wait for further confirmation is exactly what I'm planning to do. Okay, quick look at the Aussie dollar. I don't have much to comment on the Aussie dollar except to say that it doesn't look like it wants to go any lower in the immediate term. So if you are short the Aussie dollar, just be careful. It is setting up a Darvis squeeze. Okay, if you look at the radar screen here, it's setting up a potential breakout, and you have these levels here where you see it broke this trend line, this downtrend line, and now it's just going sideways. So I would wait for confirmation of the Darvis squeeze in order to be actionable. This to me is really the no trade zone. So you know, this is really now a no action zone, and I would wait for the confirmation of the Darvis squeeze, you know, to tell me should I get back on the long side or should I follow through to the short side at this point in time. This is actually the MACD is actually favoring the long side, because you can see this this crossover here, but you know, it's against the trend. It's against the trend, and you know, you've got a red Hakanashi here. So what you'd really want to see is, if you're going to go to the long side, is a break of this level. So that would kind of favor the long side, but this is really, you know, the no action zone. Aside from that, you have, you know, at this point in time, you still have this 21 EMA on the weekly chart holding. So this kind of a Darvis squeeze long with a continuation higher, like, you know, if you get above this this 8 exponential moving average, and it looks like it's just doing one of these, you know, and then you get a breakout over here on the daily chart, well then that, you know, that would look really interesting. You know, if you get one of these and you get this breakout here, that would look really interesting. So that's what I'm kind of keeping my eye on for. You know, if you look at this, you got this kind of trend line, you know, this sloppy drawn trend line in there. It's more like a wave than a trend line. But, you know, so that's kind of interesting. You know, you've got this kind of structure in place here where it would make sense for it to, you know, kind of do one of these. But without that confirmation, it's really in the no action zone. Okay, so let's have a look at the British pound. The British pound is really interesting here. We've been talking for quite a while about how, you know, we broke this trend line on the weekly chart and it looked like it put in a higher low, but it was just really going sideways. So you can see the British pound obviously had a big week last week. I wasn't watching it, you know, throughout the week. I'm just really looking at it on an end of week basis. But what you can really see here, what you can really see is we had a long squeeze fire, and we had this situation here where you have, if you look at the daily chart and the weekly chart here on my radar screen, on my proprietary indicator here, the Darvas squeeze for radar screen, you can see on the daily chart you had a Darvas long fire. So it's still in a squeeze, but it fired a Darvas long because it broke the key Darvas box resistance. Okay, so that's why you have this Darvas long fire here while it's in a squeeze. So, and then on the weekly chart you have a kind of a confluence of where it fired on the weekly chart, the squeeze fired a recent long breakout. So now you have a bona fide Darvas squeeze on the weekly chart. At 161.23 is where the signal fired. And on the, let me just clear off the chart here and move things around. On the daily chart, you have a signal that fired at 160.57. Okay, so now you kind of have a confluence here of a signal firing on the daily, a signal firing on the weekly. You have, going back to the daily, you've got blue Hakanashis. You're in a squeeze, which means you're going to get some movement. You can even see volume is picking up here. You can see the volume is picking up again here. You had a MACD crossover, that looks good. And you have, you know, your my trending indicator looks good to the high side. So just going back to the weekly chart, you have blue Hakanashis, you have, you know, this squeeze, you know, this looks good. And I'm not sure why we can't see the MACD. But you have, you know, the trend is in alignment. And let me just pause this video and see if I can get the MACD back up. Okay, it was just a minor scaling issue. So you can see the MACD then. The MACD on the weekly chart, you know, it crossed over back in here. So this looks good and it's crossing back above the zero line. So that favors the long side as well. So at this point in time, you don't really have a lot of trending. You've got, you know, this is pretty flat, so it's pretty early stage. So what you might look for is a little bit of a move higher and to get a little bit more, you know, air in here and then wait for the next pullback. So that's kind of how you can use, you know, this kind of breakout momentum play, which is basically what the Darvas squeeze is. It is a breakout momentum strategy, and then what you can do is you can kind of couple that with like a reversion to the mean pullback strategy, where this is giving you the overall direction, the Darvas squeeze, but the safer entry is always the pullback. Okay, so the safer entry is always the pullback. So this is something that you can kind of look at, you know, you can kind of look at and say, okay, well, does it make sense to buy the breakout? Sometimes it does. You know, you've got a target here of about $1.63 on the daily chart. You have a target of, let me just clear this off, a potential target rather of $1.71. So there's some pretty significant potential movement in there. I mean, the safe trade would be probably half of that range, would be the safe target. You've got, and you can see you've got some resistance coming in about $1, just over $1.65, maybe $1.66. Let's just draw a line there so we can get an exact level. So I'm spending a little bit more time on this because this actually looks interesting. So you've got $1.65, 62-ish, this Darvas box high. So this really, this looks interesting and like you could get some potential movement out of this. The question is where is the best entry for it? Now, I think the best entry on this would be, personally, I think the best entry would be a retest of the breakout level, $1.6057, somewhere in that area, or as this 21 exponential moving average moves higher, the pullback to that 21 exponential moving average. And if that happens to happen right around that breakout area, even better. That is the safer entry in my opinion. But I mean, it looks like the British pound is going higher. The question is really a matter of getting a decent entry level into it. I would really probably even look at, if you get some decent trending and maybe even drilling down to a 60-minute chart for an entry and then placing your stop below, some intermediate swing lows to kind of limit your risk. If I was going to trade this, and I'm not sure if I'm going to yet, I'll probably watch it, but if I was going to trade this, what I'd be looking at is buying an option on the FXB, okay, the FXB, which is the British pound currency ETF, and I would probably buy, a Delta 70 call option on it. That's what I'd be looking at. A Delta 70. It's hard to write with a mouse here. Delta 70 call option on the FXB, and I would probably give it up to anywhere from 2 months to 3 months out. I'd give it. This is something that's not going to happen, and well, never say never, but I would give it probably up to 2 to 3 months to work out. So I would use an option, 2 to 3 months out, provided the premium wasn't too, too expensive. So that's a potential trade setting up in the currencies that looks interesting. Why is this kind of happening? I have no fundamental reason. I'm just looking at the technicals and saying this looks good. You've got, confluence between your daily and your weekly chart. It looks really interesting. Taking a look at the Canadian dollar. Canadian dollar is sideways, sloppy. I personally would just leave that alone unless you're really good at, buying the highs and the lows and playing that. But sooner or later, that's going to break out one way or the other on you, and you're going to get, probably lose more money than you made on the trades. So I personally don't like sideways markets. I would just leave it alone at this point in time. Okay, let's look at the Japanese yen. I haven't looked at this in a while. We had basically, from this high to this low, we had almost a 50% retracement, okay, into this 21 exponential moving average. You can see how these levels are coming together here. You almost had that, and now what you would be looking at, the expectation would be for it to do one of these, right? And then roll back over. But the tricky thing is this is so overdone. What you don't want to see happen is, from a trading perspective, not from a political perspective, but what you don't want to see happen is you get short here, it puts in a higher low, and then boom, it stops you out. So at this point, I would be really cautious. I would look for signs of either moving into this level and then rolling over, or if it's going to, if this was the high that it put in, I'd be looking for signs on the daily chart, and lower, that it's ready to roll back over again, and be looking for entries, to the short side, because I think that's where the main pressure is on this chart. But, you had this extensive move lower. This was a pretty substantial move. So the question is it gonna roll over here, or is it gonna find support? So that's something that at this point in time, my bias over the last couple of weeks was, I was saying, okay, this is really overdone. I wouldn't get short in here. I would wait for a push higher to get short. But at this point in time, unless it actually clearly breaks the 21 exponential moving average and you get some continuation short signals, I'm not interested in it yet. I'm really not. I think you'd really need to see some kind of, you'd need some kind of a signal to tell you, okay, we're ready to move lower again. And I don't think you necessarily have that. I mean, the MACD is really overdone, and at this point it looks like it might actually do one of these. So I'm a cautious short on the Japanese yen. Let's just put it that way. Take a quick look at the gold. The metals have been really kind of quiet this week. I mean, they still look short side biased to me, but they just don't seem to want to really follow through. They haven't been following through lower. So if I look at this, I mean, you've got, you know, an 821 crossover on the weekly chart of gold futures. You've got a number of closes below the 21 exponential moving average. The MACD is favoring the short side. You're losing momentum on the trend, but the trend is still net positive, but it looks like it wants to roll over to the downside. On the daily chart, this looks a little bit like it's forming a bottom here in the MACD, but it looks, I mean, the chart looks net negative to me. Okay, at this point in time, the chart looks net negative, but you're not really getting any kind of follow through on the downside. You had an initial short signal here, and we said, you know, if you follow through with that short signal again, you know, I'd want to be all over the short side, but you've really had days, you know, just days of consolidation, and I think really now you're in this squeeze, this elongated squeeze, and I think you really need direction out of that, you know, with some kind of Darvish squeeze firing off again, because I think, you know, you've been quiet for so long that if you get another Darvish squeeze signal, I think you're going to get follow through one way or the other. If it breaks out to the upside, you're going to get a Darvish squeeze reversal. If it breaks down to the downside, you're going to get another Darvish squeeze short, and you're just going to basically, I don't know, I would just be looking at going with that. So you don't really have any clear direction yet, but what you do have is, you know, you have another quiet market that's really setting up to make a big move one way or the other. It's just a matter of when is it going to do that, because it's been really quiet for quite some time now. Now, if you look at the GDX, the GDX looks weaker than the gold futures do, you know, and it looks actually set to hit these targets down here. You know, these, geez, I can't even read that. It looks like around $40. This is the problem when you get multiple signals firing here. The text overlaps. So I'll have to find a way to kind of fix that. But you know, you've got a potential target of $40 here. This looks like it wants to roll lower unless it, you know, finds support at this Darvish box at, you know, around 46.12, I guess. I'm not sure exactly where that level is, but you know, this is a bit of a red flag here, the MACD, because it looks like it's bottoming, and it looks like it, you know, it's ready to cycle higher to the high side. But everything else here, you know, is negative in terms of, you know, from a signal basis. But what signals don't take into consideration is true support resistance. So you really need to see if this is a significant support level, if it's going to hold that support, or if it's going to break that level. If it breaks this level here on the daily chart, then I would expect it to follow through closer to this weekly target. So that's kind of how I would look at that. That's kind of favoring the short side in gold. But you'd really need to see those futures kind of follow through and confirm. Not just, you know, the GDX. You'd really need to see those futures, you know, kind of come into play as well in one of those directions. Either, you know, that Darvish squeeze breakout to the short side, or, you know, to the high side. But the GDX is definitely looking like it wants to go lower. Okay, let's take a look at silver. Silver is just a friggin' mess. I mean, to me, it's favoring the short side, you know, from a number of indicator perspectives. To me, it's favoring the short side. You know, you've got this 821 crossover on the weekly chart. Everything looks bearish on the weekly chart, but you've got this really strong support level here at 3107. If you look at this, you know, you've had the retracement here. You've just been kind of, you're doji on the day, on the close of Friday. You're in a squeeze. Red Hakanashis. This looks bottomy on the MACD. This is negative. If you really take everything into consideration here, what you really have is this dead zone. I mean, if you're trading silver right now from a swing trading basis, you're just sitting on dead money for a couple of weeks here, at least for, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 2 weeks. So from that perspective, net it looks negative, but you really need to break this support level of 3107 to get anything going to the downside. Okay, and to get a follow through of this original Darvish squeeze signal that formed, which would take you down somewhere to $29, close to $29 here. So until you really, this is really another one of those situations where you have a no action zone. And I think what I'd really be looking at is some kind of guidance, some kind of direction outside of this Darvish box here. So that's really what I would be looking at. You would get a Darvish squeeze come into play, either a Darvish squeeze reversal or a Darvish squeeze short. I say reversal because it's a reversal of this intermediate short-term trend down. So that's really what I would be looking at. I'd want to be kind of short below 3107, and I'd want to be long above, what is this level, 33, around 3320, I think it is. So you've got 3320, and then you've got 3107, and anything in between to me at this point in time is just really the dead zone. It's a no trade zone in my opinion. So now let's have a look at crude. I'm not going to say a quick look anymore because apparently I'm incapable of taking a quick look at anything. The video is already at an hour here, which is great. It's fine if you're, if you have the time and you want to use this as a, learning opportunity or, kind of a way to look at the market in maybe ways that you haven't considered before. But, it may be too long for some people, and if it is, I apologize. This is, my full week's research, so I don't mind spending the time to do this, on a weekly basis. If I had to do this every day, I'd probably pull my hair out. But it's a Saturday. I'm in a more relaxed mood. I'm in a relaxed zone, and I can kind of step back from the markets and take a look at this and see what's setting up potentially for next week. So I don't mind spending the time. So let's take a look at crude oil. You've got this kind of wedge kind of happening here too. You're doji on the week, and now you're into a weekly squeeze, and this looks like the MACD looks like it's rolling over, but you're net long bias here. So I have a net long bias for the time being on the crude oil, just for the simple fact that it's holding, it's putting in a series of higher highs, and higher lows on the weekly chart. Even though you have this kind of sell-off happen, it's really just tightening up. And it looks like it wants to do like the other markets. It wants to break one way or the other. So, barring any further confirmation of that, I have a net long bias on it at this point in time until, price action proves otherwise. So you've got mixed signals here, obviously, on the weekly chart. It looks like you're going to get some return to volatility at some point in the fairly near future, and that's kind of been the theme with some of the other markets as well. So heads up on that. And then you have this kind of wedge kind of thing happening here on the daily chart as well. So I would really just wait until the markets start moving again and see what the markets are telling you at that point in time. I think that, a break of this Darvish box to the high side, you would need some more constructive action to really want to trade it long. And now you've got all this price resistance overhead, that you have to contend with on the way back up. But net, unless we break this, the strong support around, I think it's around 188, you've got some fairly strong support. And wherever this Darvish box comes into play, which is around that level, unless you break that while you're in a squeeze, I'm still favoring the long side. So if this were to fire off a Darvish squeeze short, well, I wouldn't fight that. I definitely wouldn't fight that on a weekly chart. But my bias is favoring the high side. So I'd like to see it follow through above these highs. Not that I'd like to see oil that high, but from a technical perspective, I think it would make, a little bit more sense, to do that. It would be a little bit easier to trade, just because, everything would come back into alignment here a little bit easier on the weekly chart. So I hope that makes sense. I mean, anything can happen in these markets. If we fire the Darvas squeeze short, I wouldn't really fight that, but unless my trend indicator was in my favor, I don't know if I'd really want to trade that, especially knowing we have such strong support here. It'd have to be a pretty decisive break of that level, okay, 188 a barrel. And, but my daily chart, would look pretty good for a move back down to 98. So, if you got this weekly squeeze, follow through, this Darvas squeeze on the weekly chart, then I'd probably be looking for targets around the $98 area. So you'd potentially have a couple of dollars of movement to the downside, but if it followed through to the upside, you'd have, several dollars of movement to the high side. So we'll just have to see which way this resolves itself. Okay, and let's round out the weekly video, the weekly recap, with a look at the grains. Now, soybeans are obviously very strong, and you have, this, you were doji on the week last week from a weekly basis, and now you had this kind of accumulation all the way back up to the highs here. You still have, in my opinion, some pretty key resistance overhead. And you can still see you haven't gotten through that key resistance in soybeans. So this 1456 level is really the level to watch in terms of a ceiling in the soybeans in the short term. And if you look at this, you've had all pullbacks here at this point in time back to the 21 EMA have been met with buying. Even this last pullback here a couple days ago has been met with with this buying all the way back up to the highs. So what you're kind of at a key spot here, and the way that I look at this is I see a little bit of a divergence happening where price is going higher, but you can see the momentum on your squeeze is going lower. You can see also that the MACD has kind of topped here and it's kind of rolled over. And then you can see here, you don't really have a divergence in your trending indicator, except that in terms of, a peak and trough kind of divergence, but you do have, waning momentum here on the trend indicator. So if I look at it from that perspective, I mean, this is really your key resistance, no matter what the indicators are telling you. In order to be interested in the long side at this point in time, in my opinion, you'd really need to get above that key resistance, but then you have some resistance immediately overhead. So from my perspective, I'm not really that interested in any further upside movement in the soybeans at this point in time. I mean, you had a fantastic trend, and you really need to see which way this is going to resolve itself. If you're pretty extended here on the weekly chart. It's not to say that it can't blow off and go much higher. But I, being a more conservative kind of thinker and trader, I really see limited possibilities on the upside at this point in time. So I'd be looking at potentially, potentially a deeper pullback. If it doesn't get through this resistance, the market is really going to look for the next area of liquidity. And it's going to look for buyers, and where it's going to find buyers is probably much lower, at least at 1390, 1324. So you could get some pretty extensive blow-offs to the downside if it doesn't get through that resistance. So that's really those are really the levels to watch. If you bust through that resistance and you get a pullback back down to it and it becomes support, that is potentially actionable, but I really don't see that much possibility for upside. So I'd be a really cautious bull at this point in time in soybeans. Okay, let's take a look at corn, and then we'll take a look at wheat, and then we'll close up the video. Corn is just a friggin' mess. I mean, what do you do with that? You're in this huge weekly Darvas box, and you have a potential a potential breakout situation, a potential Darvas squeeze. But I mean, for the I don't know, I don't want to offend anyone and say, for the love of God or anything, but, saying that from a non kind of religious point of view, for the love of goodness, what do you do with this? It's really sloppy. You've got mixed signals, well, these aren't so mixed, but, you've got everything here looks like it's favoring the short side, on the daily chart. On the weekly chart, it's kind of favoring the short side too, but you've got some resistance. But it's really just in this huge, unactionable range, dead zone that I really wouldn't know what to do with that. If you're not intraday trading and looking at intraday signals, from a swing trading perspective, I wouldn't touch that with a 10-foot pole. Okay, now if we look at wheat and then we kind of tie everything together that we've said here, corn was, I think, corn is holding support, but corn was net sort of from an indicator basis and from a line in the sand basis, where, let's say for example, you're below the 21 EMA here, and the 8 and 21 is just crossed over. Same situation on the daily chart in corn, right? Now let's look at the net percentage change. You've got corn down on Friday 1.5%, soybeans up 2.7%, wheat down 1.32%. You've got that kind of divergence there, where they usually, I would expect them to more closely track each other, to move together. So if you look at that kind of weird action, and then you look at the fact that soybeans is at resistance, right? Soybeans is at what I think is pretty significant resistance. Corn looks a little bit, corn looks like it's sort of favoring the downside, but then you look at wheat and you say, okay, well, wheat actually fired on the weekly chart a Darvas short. Well, that's interesting. So let's change our pen to red here and take a look at this. You've got Darvas short here on the weekly, right, at 626, and you've got, the squeeze in play here, and you've got the red Hakanashis, and you have your trend lower. So this is interesting. If this follows through, you have a potential target, let's see, potential 561 target, or at least a retest of these lows. Okay, so you have a potential target of 561, or at least a retest of these intermediate lows, a little bit higher, right? And then you have on the daily chart, okay, on the daily chart you have some negative action coming into play as well, with a Darvas squeeze, initial Darvas squeeze short at 611, and if it popped up from there, but if it comes back down and it follows through 611 again, with all of these kind of indicators in play, then I would have to say that would be kind of a go with, it busting through 611 for some continuation down. You've got a target here of 553, which is lower than this weekly target, ironically. But that actually looks to me like that kind of tells me that the move in soybeans may be over, and maybe the grains are all ready to head a little bit lower. So that would signal a potential pullback in soybeans from resistance, and then lower moves in the wheat and the corn, where you're just getting a pullback in soybeans, but you're actually getting fresh sell signals at least in the wheat. So I hope that explanation makes sense. But at this point in time, like the preponderance of evidence, when I look at the three different markets, the corn, the soybeans, and the wheat, tells me that we may be getting some lower prices in all of them. So I would be looking at, if wheat follows through below 611 and soybeans can't get through that resistance level that we pegged there on the weekly chart, then you might be looking for some follow through and downside on the in the grains markets. Okay, some pullbacks in the soybeans. Well, not pullbacks, but a pullback in the soybeans, and maybe some lower action in the wheat. The corn's a little less telling, although it does look negative. it looks more negative than positive. So this is some potential interesting action setting up. This seems to be fairly strong support here at the 611 level, so it really needs to break 611 in the wheat. So that's what I'd kind of be looking at. I hope that that analysis helps. We're at about an hour and 10 minutes for this video, so I'm going to wrap it up now, and I hope that you all had a profitable week, and I hope that this analysis helped. We have a meetup coming up next weekend, the last Sunday of the month. So we're looking at, I believe it's the 29th. So we're looking at the 29th. Technical analysis part 2. We did a introduction to technical analysis, technical analysis part 1. So if you're interested in attending, I believe I'll just link you over to that right now. Okay, so there's a couple ways you can get to the meetup site. You can go to my site, markettradingconcepts.com, and then you can go to this meetup section here. Click on this link, and click on this link, and it will take you directly over to the Burlington Meetup site. Now, if you look at that, right now we have about 53 members of the Burlington site, and you have to actually join. You have to join in order to participate. I'm just going to log in. I'm just going to log in here so you can see once you've actually joined the meetup site, you can come over here to upcoming meetups, and the site is actually meetup.com and then / Burlington investment idea meetup. Okay, so there's the actual site there. We've got technical analysis and chart reading part 2. At this point in time, we have about 11 people attending, which is fairly normal for our meetup groups. We can hold about 15, maximum 20 people, but 15 people reasonably at our trading floor facility. So we have, at this point in time, we have 4 spots left. If you're interested in attending, this isn't like a huge moneymaker or anything for us. We're only charging $5 admission. It's going to be an hour to an hour and a half presentation, and we're going to focus on, moving through Technical Analysis 101 into Part 2, slightly more advanced technical analysis concepts and trading concepts, and it should be an interesting presentation, an hour and a half, and then we'll have some time to, for everybody to kind of chat in an open forum and to, get to know each other a little bit, have some social time, and, get to know each other and, exchange some ideas. So if you're interested, that's taking place next Sunday the 29th. Look forward to seeing you all out there, and good trading. I hope you have a fantastic trading week next week.